Hey guys, welcome to the YouTube channel. Today we're going to go over SWPPX, which is kind of a index fund tracking the S&P 500. It's put out by one of the most famous brokerage houses and investors, Charles Schwab, and why it's a good starting S&P index fund to get into. And as you know, there's been a lot of hype and a lot of news going around that the S&P is just slated to just go through the roof this year, and that has to do with none of the compounding beneficial effects from the economy, the upcoming presidential election, and other positive news. And as we see, we're coming out of let me just talk about the job recession. The job market, it's looking more boisterous, looking a lot more positive. And so, from that perspective, things are looking good. Generative AI and technology companies and stocks surrounded the technology of generative AI and providing those kind of technologies to support the data centers that are responsible for housing and ultimately producing and being able to, at scale, make generative AI just a part of our lives and a part of the corporate world and increase that usage is just all good news. And so, if you're just looking to get started into a mutual fund and you don't know where to start, some of the best ways to do that is through proven and long term index funds in the market that a lot of people know about and a lot of people defer as kind of the benchmark or the hallmark on where to go if you're looking to get into investing in the first place. So let's go over why I think that SWPPX is a good fund to get into. So let me go ahead and share my screen with you right now. Well, actually, we are sharing. So right now, Schwab, the S&P 500 index is at 84.49 NAV, which is the net asset value, which is the closing cost of a fund at the end of the business day. And some of the great things about this is the performance. Now, typically, a good fund that's tracking the S&P will do its best to get around 10% annualized over the number of years you're invested into it. And I think that overall that the Schwab SWPPX has done a better job than the overall S&P in terms of returning its investors really good returns. So if you look at some of the performance overview of the SWPPX, they include year-to-date return is 15.58%. 5-year average return is 14.9%. That's fantastic. So if you have some extra cash that you can free up and invest on either a lump sum or dollar cost averaging. And dollar cost averaging, if you don't know, and I'll cover on another video, is essentially dedicating a set amount, and it's typically not a large amount, but let's say you have, after your salary, wages, your expenses that you need to pay off, necessities such as food, utilities, and if you own a house, a mortgage, anything in excess of that and in excess of an emergency fund would go into investing, and that's a percentage of, say, $500, and set that same amount every month would be what they defer to, or what they call as dollar cost averaging. And so you're investing a set amount and it's compounding either into a mutual fund, index fund, or whatever asset you're invested in. And then you can see your investment grow. As you can see, yeah, so it's the good thing about this fund is that over the history, annual total return percent history, if you look at the screen here, over the years, it's pretty good what it's returned in its investors, and that's a really good hallmark, a really good benchmark, or a really good indication that this is a good fund. In terms of holdings, what types of stocks and assets does the Charles Schwab Index, S&P Index Fund invest in? And that's heavily weighted into the technology sector. And these aren't fly-by-night technology companies. These are companies at the forefront of innovation, several $billion in market capitalization, and have good product and good services, and overall fundamentally sound as a technology company. If you take a look, Some of the top 10 holdings of Charles Schwab SWPPX include Microsoft, Apple, Nvidia, Amazon, Meta, aka Facebook, Google, Alphabet, aka Google, strong other funds such as Warren Buffett's Berkshire Hathaway Class B shares, and a smattering of other companies, including the pharmaceutical sector of Eli Lilly and finance and banking with JP Morgan Chase. So a good overall distribution, again, heavily weighted through technology. Over the years, it's kind of been proven that the technology sector has given its investors the best returns on their investment. And okay, so let me share another screen with you. And what I'm going to do is I'm going to compare some of the competitors in the market. Let me go ahead and find that year to date SWPPX. Hold just one second. Okay, so let me share this other screen with you here. Let me turn this off here. Let me share another screen with you. So bear with me as I share another screen. Here we go. Okay, so now what we're seeing is some of the peers or competitors of Charles Schwab SWPPX S&P 500 fund. And if you look at the expense ratio, which is what you're going to get charged annually for holding the mutual fund, um, it is at a very low cost, and it's at 0.02%. Now, if you look at some of the competitors who are also good funds to think about or invest in, including Fidelity Total Bond Fund, the John Hancock Opportunistic Fixed Income Fund, um, the Franklin Equity Income Fund, other funds in the market, they typically they have a higher expense ratio that they're charging its investors. Also, I would say that the overall performance of these funds isn't as strong as SWPPX. If you look here at the chart below, SWPPX is highlighted in orange, and you can see it's outpacing its peers in the market. So, as I mentioned, I think that for the beginning investor, or if you don't have a lot of knowledge or understanding of a sector, like if you know that there's a lot of hype around Nvidia, and it's a good company to invest in. Do you know, and beyond the fundamentals, that's the financial ratios, do you know what they do, right? Because I think that fundamental ratios are okay, but you really need to know the product. What type of products, are they invested in? What's their future pipeline look? What's the current demand? What's the future demand? How's the business doing overall? What are the net sales, projected sales? And if you're not too familiar with that and you still want to invest in Nvidia, but kind of have more of a safety net in terms of being diversified with other companies and still getting a good return on your investment, you should strongly consider an index fund. And SWPPX is one of the best funds out there. So anyway, thanks again for joining today's video. I hope you got a kind of a good insight into this SWPPX Charles Fund S&P 500 Index Fund, and why I think you should invest if you're just beginning to invest or learning to invest. Thanks a lot. Don't forget to click and subscribe. It really goes a long way in supporting the channel, and I will see you on the next video. Thanks so much for joining, and